right, everyone. Welcome to the Trader Investor channel. We're doing another session of market analysis and preparation for the coming week until next Tuesday. And there'll be some interesting concepts that we should cover around how to place proper trades and expectations. Last week, as we went over this, we drew some channels, some trend lines. We saw price could potentially move in a channel, right? So we don't trade because we anticipate, right? We trade what the market gives us. We make some prediction, but we let the market tell us that that prediction is correct. So our prediction was we would be in this channel, but we need that confirmation. So we were here last week. We were at the first circle to the left. And if price hit the upper channel, it would be a down play. When it hits the lower channel, it would be an up play. However, like with beginning trades until everybody is at the right level, we said we're only going to trade the upside, right? It's this point. I've been thinking about this point for the last few days. It's very debatable because if you look at the daily, then you say, obviously this is an uptrend, right? This is obviously an uptrend. If you look at the daily like this, you'll say, obviously this is a downtrend. So that's why we change it to hourly, and then in this grand scheme of things, we're in a short-term downtrend. So if you're only saying, I'm only going to look at trades in a period of, I don't know, let's just say July through September, like in a period of 3 months, that's all I'm going to focus on, then you can say, okay, my trend is downtrend. As we're learning, as we're building the muscles, these are some of the things we can do to modify our strategy, right? So we said strategy. I like to reiterate so that we can stay focused. Our strategy is what is the long-term trend of the current market, right? We look at that long-term trend, and we of course we start with the monthly. The monthly says with an uptrend in the Qs, we held a 61.8. In the SPYs, we held a 50%, and in both cases, we're well above those markers, right? So in the Qs, we're above that initial 23.6% retracement. In the SPYs, same, right? We're playing around that area. We're trying to see, are we going to capture new highs or not? So as we go to lower time frames, in that grand scheme of things, we're still in an uptrend. However, now when you go to daily, this is where it becomes a bit tricky. And we did this a few weeks ago, maybe a month is now, when you hit the 78.6, where we hit it here, failed, but hit it here, collapsed from failing that 78.6 retracement from this downtrend. We know it's an uptrend, right? And we've been drawing new fib retracements in this uptrend momentum. So in the recent uptrend, high to low, if you recall, we will reverse this if we break the 78.6. We're marching there. We're really quickly marching toward that 78.6% retracement. So if that happens, right, the way we think of our trades is if we blow through 78.6 and use it as resistance and head down, we can play to the downside. Now, monthly still upside. The reason that I say we can play to the downside is short term, it's showing some weakness, and we really want to take advantage of it, right? And while the broader market is still heading down, we don't want to just only focus on the upside until we come to an area of value. When we come to green, 38.2, 50%, or 61.8% retracement. If we come to those areas when we do this, right, when we start to come here, we can look at, okay, now the pullback is over. Because some of this pullback is political, right? This current pullback is very, very much driven by political uh, shenanigans, right? The US government shut down at the end of September. That's really what's driving this market to the downside. And of course, institutions love those news because they want to grab a cheaper price. So we identify a demand zone, and that's where we are now. We're in that demand zone. We identify gaps that we have left in the past and gaps that we have yet to fill from the past. And so there's a gap here that was left open at the beginning of June. We're heading right for that. If you draw your gaps and remember not to remove them until they're taken care of, then you don't have to rethink and redraw, right? Why is price going here? Well, it's going there because there's a gap here. There's a demand zone here. So we've already identified those. So from that perspective, then, here we had identified a potential channel, but we're still well above that 78.6. We're well above that in the Qs. In the SPYs, we are going there. And one thing I want to remind you, the SPYs never went below the 50%, but the Qs did. And I said a few months ago that at some point the SPYs are going to play catch up. I think they will want to make a similar attempt. Maybe the Qs will remain strong as SPYs make this attempt. Maybe the Qs will remain a bit stronger to kind of offset. I don't have any scientific calculation that I've done, any data to back up what I'm saying, but based on a lot of things that I see, like the two at some point they want to. There's a divergence right now, so they want to come back. Get that at some point. This is just my thought, so please do not trade on that thought, but just watch for it, right? Things that could potentially give you some signals of weakness in the SPYs to give us some entry down here, right? This is a great opportunity to take, especially if you want to take it with a leveraged ETF. You can take it with that. A few weeks ago, you asked me, why I don't fear leveraged ETF. I think there's a point that I really want to drive home that kind of answers that question. So these leveraged ETFs as a long-term holds are very, very dangerous. So if you bought TQQQs here at the highs, you are still more than 50% down. But if you look at the Qs, you're almost back up there. Right? This is the danger because these leveraged ETFs have this expense ratios and other fees. Once they start dropping price, every day they start losing value. Now, if you buy down here, you can ride it up. You're much safer to do that, right? So if you had bought at 12, you rode it up there. Even if it collapsed, you're still above that 12. But when you buy at a high level, this is when it becomes dangerous, right? So you want to buy these leveraged ETFs as low as possible. Then you can quickly double, triple those values, right? From 16, we almost went to 48, right? That's almost a triple. But the losses are really significant. So leveraged ETF, I talk about them. I don't think I've been very clear on this part of that conversation on the leveraged ETFs. I love them, but you have to be mindful of when you get into them. Like you never want to get into them when they're high, because over 2, 3, 4, 5 years, like it could go from 90 to 3 if the market stays to the downside over that period of time. So let's just be mindful of that. So I just wanted to cover that quickly. So, but however, like my point is, since the Qs tested the 61.8, if the spies also give us that opportunity somewhere down here, we can use a leveraged ETF, because at that point, that could be somewhere close to the 15 to 20 range for UPRO, and it would be very easy to catch a triple from there. So, with that said, uh, when we come back to our hourly, what happened from last week to today? So we were anticipating this channel. We saw this channel broke. It didn't even. It went slightly up. I think over. I mean, on Tuesday, but since we talked about it Tuesday evening, from there on it's just nothing but down. Right. So it never gave us this opportunity. Even if you wanted to take the opposite side, it never gave us the opportunities up here. So I think this is a very important lesson to remember. Just because we draw something doesn't mean we take the trade. Like here was the signal that we could be in a channel, and so we wait for, not we don't buy in the middle of that channel. Right? We want to buy it at the bottom of this channel, but that kept breaking, that kept collapsing. So if we look at Amazon, since there's a big news today, if we look at the daily from a retracement perspective, Amazon is playing around the 38.2 retracement. If you look at the spies, the spies are actually really struggling to even stay above the 61.8. If you look at the Qs have already broken the 38.2. Now I think that the way that I have drawn this might not be a fair uh, uh, a, a fair comparison, uh, but that's because Amazon never went below that 38.2, so I never have to redraw when I look at this move. But in the Qs, I had to redraw because we went below a couple of times. So we can validate that. Right? Why did I draw from there? We can validate. Maybe hold on here. It never went. It never went. I don't know. It barely touched it here, so maybe I shouldn't have. Maybe I should have the same comparison. So I don't know. I think maybe I did that drawing for some other thing and I never remember to move back. So maybe the comparison is March here, and Amazon is also March. I think this one is a more fair comparison. Uh, and so here Amazon is at the 38.2, where in the Qs we're not as far down as Amazon, but I think where I will be careful if where I want to trade Amazon, I think because they're both at the same level, is will Amazon show more weakness? Because today's drop was significant. Sometimes the way you think about this is maybe they were just playing catch up with the rest of the market, right? Because they were driving high. Maybe they're just playing catch up, and somebody just said, "Hey, let me drop the price down." So similarly here, I want to make sure I do an equal assessment So this is it. So the SPY is actually still, I mean, they're still the weakest in recent days. So from that, right now, like from a new trader perspective, what I want to see, let's erase this channel because it's no longer relevant to us. It has no meaning to us anymore. Uh, what I want to see now, like because we have this retracement values green to green, I want to see the SPY's attempt to do this. That's one. So there's three options, right? So there's that 50%. This is two. Or we have the third one, which is the 61.8. So I want to see one of these three in confluence with our candlestick patterns. Railroad tracks, engulfing, in this case, bullish engulfing, flag formation, or a hammer. If we see one of those in these areas here, so I will circle those areas for us then now, our new areas where we're anticipating where we could take a trade are when they're retesting these retracements. Okay? When they're retesting this retracements. This is the kind of pattern I want to see for you to take a trade on, right? For as you're journaling. Because we don't have a very clear indication that we're completely to the downside. Right? We haven't broken that 78.6 until we break that. We don't take trades to the downside. Okay. So with that, I want to shift now a little bit to to a conversation to where have you thought about trades? Have you thought about setups or any other questions that are related?
Yeah, so I did take a few trades this week. The first one was on Tesla, and I'm still in it right now. So if you go to the Tesla hourly, oh, whoops.
Okay.
What I saw, and this was on Monday. On Monday, you see there at 10:30. Well, I guess Monday you see that drop just below that demand zone, and then it recovered, and then it went back and tested, started basing in that demand zone and formed that what I kind of saw as railroad trucks. I know this isn't perfect, but I did see, it was just kind of basing off that demand zone. And the area of value would probably be a little low, not good enough to give it a shot and do some sort of half-size position, primarily because of just the way the market has been acting and the downside pressure in
I'm
the
busy.
market that
No
I've
noise.
seen.
Video
So
yarakuno.
I entered right there, and
Okay.
then my stop loss was right above the following demand zone that I saw at 230, which was higher than that trade. It's just been going sideways ever
Okay.
since.
So one thing I wanna take a look at is this. I haven't drawn my areas of value for Tesla in a while. So if we start clean, right? Let's start clean because I want to go over some of your analysis, like really clean view of that. So let's start with monthly. Where I think it's kind of a confusing state that Tesla is in, but it's still in an uptrend, right? In an uptrend, but it broke the even the 61.8. Right?
Yeah.
It came down and tested the 78.6, right? And so that's our this is our monthly levels. Sort of from a weekly perspective in this area, what did we do, right? So we keep breaking uh 38.2 multiple times, right? So we keep breaking it, and then if we are here now, and let's just make it weekly. So if we look at the weekly, we're playing around that 78.6 because it's like it's a big downtrend, right? We can't ignore this downtrend. So
Mhm.
it's trying to kind of reverse from that downtrend. So then in recent moves, then we can obviously see this is what's at play. Let's make it ready. This is what's at play. So it went actually in the green to green zone and tested it, right? So now that we have clearly seen our fib levels, then I think the next thing remaining is where is our demand zone, most recent demand zone. So we have to look at this as demand zone because uh, like Monday, we have to know this already when
Mhm.
Monday happened, right? Another uh, demand zone is down here. So now I think this is cleaner. And like we had a similar uh, supply zone here drawn, and when you were explaining, I knew what you were talking about, but I just wanted to capture this process for us, right? So on Monday, we blew through this demand zone, which we said, okay, I don't care about this anymore. We came to this demand zone and tested it. So when we test this demand zone, ideally what we want to see is it uses it as support to go up. Uh, so now the first 2 hours, right? Is that what where you said this is where I see a railroad track?
Almost like a hammer that kind of morphed into a railroad track right there.
Yeah. So
Um,
even if
yeah.
you say the first hour is your hammer, right?
Mhm.
Because let's say it's close enough, so this would be your entry, right?
Yeah.
That would be your entry. Now you're in, taking some heat now because this position
Yeah.
for the 241 requires way up here, and as you can see from the profit and loss, we're in negative territory. Of course,
Yeah.
we're very close to our entry price.
Hmm.
Uh, so walk me through your exit strategy.
Yeah. So the way I had set my exit strategy is I kind of monitored the trade. That was a very long wick that it formed on that way down and that huge push up, right? So
Yeah,
you saw a
yeah,
lot of volume stepping in. So I told myself, well, their volume's there, right? They're pushing the price up. Um, it is tested that 38.2 as well. So that that's the level right there on the fib, which I know we usually like a little bit deeper of a retracement, but enough there that, it was interesting. And then I saw it kind of basing around that demand zone. And so I said, I'm going to take a shot. My exit was going to be right around the bottom of that following demand zone that it created around 235. And then as price kept pushing, I kind of just kept
Hold on.
moving
So are you playing to the upside or downside?
to the upside.
So how is your exit the 235? Is that your stop?
Sorry, my stop. Yes, you're right. My
Okay,
stop.
okay,
My
okay.
stop loss, which I kept moving as price pushing up. So essentially where my stop is right now is right at the bottom of that wick.
Of this,
So
of the first big long wick, right? Right at the bottom
right.
of this.
Yeah, it
Okay,
was at
okay.
the following demand zone, but as
Yeah.
price pushing up the next morning, I
Okay.
kept pushing my stop loss up. So
Okay.
my exit strategy, considering the current state of the market and just the fact that it seems just downside heavy to me, as I've monitored the overall market. We just talked about earlier about the S&P and how it just keeps retracing back towards that 50% or even lower. So I said, I'm not going to shoot for the 2. I'm going to shoot for the 1. And then I'm going to leave some runners, potentially take out about 2/3 of my trade at 1x, and then leave some runners for potentially the 2x. So that's kind of my position. Right now, I'm still monitoring. Yeah, I haven't gotten out, of course, because it's just been kind of trading in that zone and chopping. So it kind of pushed up, pushed down, pushed up, and then now it's just right around my entry. So I'm just monitoring that trade front for now to see how it's going to go.
Okay, so let me give you a couple of areas of value I see, right? So we have this gap, which could be a good area of value, and we have this supply zone,
Mm-hmm.
which could be another area of value. So if this thing starts to run, you said one thing very important. You said the current uh, economic conditions, political conditions, have you tighten your exits, which is very good. If this thing starts to run, excuse me, I could see it trying to reach these levels here, right? Which is more than your 1x. You're like halfway through your 2x. If you go all the way to that gap, is your 2.5x. So I like your strategy. Like, hey, at 1x, I don't want to trust this much. At 1x, I want to get out. The only thing I would do at 1x, I put my stop above my entry. You've already decided I booked some profit, right? That's why you're
Yeah.
exiting. You're not
Mm-hmm.
protecting your position, you're booking profit. So if you're booking
Mm-hmm.
profit, then protect the rest of it by not giving back all that profit that you give.
Got it.
Right?
Okay.
So you'll at least gain 50% on the total position.
Yeah.
Yeah. So that's the only thing I would do. But
Okay.
overall analysis pretty good. Pretty nice trade. Uh, one that is very volatile, so it's good to see action there.
Thanks, Benny.
Yeah. What? Any other trade?
Um, there was one more. This one actually ended up getting stopped out on this one. So this was on NVIDIA. And I think this is kind of, as I reflect back on this trade, this was more fear than anything, because I think I had just some conviction that the market is just kind of heading down. And so I didn't really trust my charts as much as I should have. And I had a stop that was just a little too tight. And it ended up stopping me out, unfortunately. This is from Friday. So Friday, I saw that we gapped up on Friday, creating that gap up. Then we came back down.
Hold on. I don't see a gap up, so
The gap up was early in the morning, so it filled the gap during the day. So that's probably why you don't see it, because this is the hourly chart.
so what you're saying
It
is
ended up closing the gap in the first
so
hour.
so here when it opened up here,
Yeah.
you saw a
Yep.
nice gap, right?
Yeah. Yeah.
And it closed the gap. Okay, so it's like
Yeah.
okay, so you saw this gap up, okay?
Yep. I saw that gap up, and then I closed that gap, went back, came back to test that gap again. At that time, it created that hammer that I saw right there, followed by um, that big
Engulfing.
big
It's
bar,
almost engulfing. Yeah,
almost engulfing, almost like
yeah,
engulfing, almost railroad tracks when you look at them.
yeah.
And so I took a position um, around halfway of that engulfing bar.
Okay.
So I
So
long.
so let's just say that's your position. Where was your stop?
My stop it was at just slightly below the gap that it had closed.
Like
Um,
this.
yes,
Yeah,
almost
so
exactly. Yeah,
I like that you said fear in your analysis because fear is one of the most dangerous tools you have to destroy your account. And a stop has to be an area of value.
yeah,
This was not an area of value, right?
mm,
If you
yeah,
had said my stop was down here, it was a much better area of value, and you're giving it your trade some room.
yeah. And the way I was thinking about it, just to kind of add a little bit more context, is right now where that was at, it was right below. It's just that I saw a demand zone right there. So I said I would set it right above the demand zone. There's a hourly demand zone that's formed at the 411 area on the bar a little bit before the ones we're looking at right now.
Okay.
And so I told myself, actually a different one. If you go back a little bit, um, you'll see that right there, that big wick right there. Yeah, so I said that was the demand zone, and I'm either going to expect it to bounce at that demand zone, or it's going to blow through it, right? Because that was just such a strong demand zone. Even if you zoom out on the hourly, you'll see that it was a big, strong demand zone that had just really strong buying and stepping at that level. So I told myself it's either do or die at that level. Like if it's not going to bounce from
But
the
we never came there. So
yeah. So I think I had set it slightly above that demand zone. Was
yeah, but I
uh,
mean, however slightly above you go,
yeah,
even if you go the low of Thursday, we still never came there, right? So I think you were stopped out. To me,
yeah,
the reason you get stopped out is your stop is up here.
mm, yeah,
That's the only way you get stopped out on Monday because we cleaned out those stops, right? The institution
yeah,
said, hey, there are people who don't have an area of value as a stop. Let's just go clean it.
yeah,
I, I, I mean, if you say you're stopped out, this is what I see. But again, I think the major part is fear, which was a good analysis, right? That's why you journal those. Hopefully, you
yeah,
wrote down. Fear is why I out of this trade. But if you're stop loss was properly set right above this demand zone, which is around the uh, you know, 407 area.
Mm.
Yeah, 407, 408 area, and then your 2x. You see that your 2x is actually achievable because it's not
Mm.
that far away from this area. Plus, it's you know again area of value. It's the next supply zone, right? As
Yeah.
an area of value, and it's very achievable.
Mm.
And this trade is actually positive if it was set up this way. Not that
Yeah.
much positive, but it's still positive.
Yeah.
Yeah, so it's
I was
good. It's good.
reading.
I like it. I love it. I love these mistakes because it teaches us, hey, why did I have fear, and why did I put my stop where I did?
Yeah, I think it's just because this chart, everybody's been saying it's just so extended. And as
Yeah,
I kind of go back, it's just making lower highs, lower highs, lower highs, lower highs. And so I just kind of had that thought process that I shouldn't have relied on that. It's too heavy, but it hit my stop loss just 2 pennies.
yeah,
uh, 2 pennies is kind of what I got hit by. So unfortunately, and I just and so anyways, it was a good learning experience. Um, but yeah, this was the second trade.
So one of the things I always say, like, is green to green, right?
Yeah.
So this trade, as you're seeing lower highs, okay, let me show you something. If a trade went from here straight down here, like this, I say take this trade.
Mm.
But we don't have this. What we have instead is a trade that went right. It's zigzagging its way down
Yeah.
before this up happens. So for this, I would say, personally, I say don't trade it yet because what I want
Mm.
to see is come here and take it.
Mm.
Right. I want to see my green to green because it's not a straight shot down. These shallow pullbacks are very dangerous. They're good
Mm.
learning experiences, but they're very dangerous. Because why is it just like down here it worked? You say, well, it worked down here. Why doesn't it work here? Right? It doesn't always work, but most of the time it doesn't work when it's a shallow pullback. Like if it's a straight line, you can risk it. It works better. If it's not a
Mm.
straight line, if it's been doing its zigzag down, then you gotta watch out. But I like how you analyzed it. Including why you were stopped out. I think that being stopped out monitors this trade. It wouldn't surprise me, even if you had made your stop wider, that you would not hit that. It wouldn't surprise me. Like the next 2 days, I think it is still going to come down. Why? Because the overall market is pushing everything down.
Mm.
Yeah,
Okay, sounds good. Yeah, I'll definitely monitor it and see where it lands.
absolutely. Never you did you take any trades?
I'm an observer today.
Do you have any questions?
Now, can we look at the automakers, one of the automakers,
Which one you want
like
to look at?
maybe Ford or something? Yeah.
Okay. I mean, so Ford, if you look at Ford over the last few months, it's been in a consolidation mode. It is in the range between 10 and 16. It's been playing around between 10 and 16. And now we're at that lower end of that range. And so how will they react is would be quite interesting based on what happens with the strikes.
Yeah, the unions.
Yeah.
They're demanding
Yeah.
a 40% raise.
Yeah, it's
And right now,
uh,
paid on average $66 an hour.
yeah.
Uh, and even Tesla's average is like $47 an hour.
Yeah. Uh, yeah, I heard somebody from the picket line say, I can't even afford the car that I'm making.
Yeah. It's kind of crazy how the news hasn't really impacted the stock, though. The whole strike, because I mean, it's relatively. I mean, I guess those are pretty
Quiet.
big, but
Yeah, but it's stabilized, right? It went down and stabilized. It's still in that range, right? Both Ford and
yeah,
GM, as we see, they are stabilizing in that range, right? If you look at this year, if we look at the daily, this whole year, overall market wants to come back there, but GM and Ford are remaining at the uh, bottom, actually, of this year. Right?
yeah,
The thing is, I think the market does not see this as a threat. They probably have to go back
yeah.
and
That support is pretty strong, though.
yeah, yeah. This whole area, I'll erase it because I don't want to. Well, maybe it is a good demand zone that we can also look at daily, right? So we haven't blown through it. So there seems to be some demand still here that every time we come here, we push price up,
Yeah,
right? And same scenario like in May, for few days, few weeks actually, we stayed in that range. So again, here we're in that range. So we could push up. And these are very good uh, opportunities for short-term option plays.
yeah,
Not a lot of risk, right? One contract is not a lot of risk. 32 to 40. You have to do at the money or near the money. You can't go out of the money options because those lose value very, very quickly.
yeah.
Yeah.
So, because even pre-COVID, that was kind of like a support, right? That
This
same,
is
same.
this area here.
Yeah,
Yeah, it's been very strong support pre-COVID. So COVID is an anomaly. So you're right. I think if you look back here, we could push back up to the high 40s, mid to high 40s. Right? It's a good expectation to have.
yeah.
What else?
Interesting on your thoughts on retail, like Target. It's just been getting really beat down. At this point, it's just keeps making lower highs. It was consolidating for a little bit, but it's down pretty significantly.
Whereas Walmart is doing the opposite.
Yeah.
Right? So I don't know if it's a retail problem or just a specific company problem.
Mm.
Hold on. JWN. Like if you look at things like Nordstrom or Macy's, they're really hurting. But why is Walmart not hurting like that?
Mm.
That's quite an interesting thing to look at. But Target, it's one of those companies I like. Uh, and if we come down to these COVID lows, which seems we're about to get there, this might be a good opportunity to buy, like for uh, not a not a trade, but an investment,
Mm.
right? Because this is a solid company, in my view.
Mhm.
So from an investment perspective, I think there's potential to grab some at quite a good discount.
Mm. Okay. Yeah, definitely something to keep an eye out for.
Yeah, lots of gaps though. Lots of gaps.
Yeah.
See, when the whole market collapses, like Okta closed this gap, even though it's still up in that area. When if the market collapses, they're gonna go down. Like this is one of those companies I like. I bought it in the mid 50s. I would like to see it go back to its not all the way to 300, but like to 150 or something like that. Uh, yeah,
Mm. What are
AI
you?
is hurting.
Yes, it is. It's a good thing. Almost back to our bar line.
Yes, I have an alert. Yeah, you can see I have an alert to buy more.
Yeah. I was gonna say the other company that just had some fireworks in the past week is Splunk after they got acquired. Um,
By Cisco, right?
yeah,
Yeah, I don't know if they're acquired or if it's just announced. So it's a pretty nice jump, but too late
yeah,
now.
definitely too late now, but yeah, I think they announced it, and obviously it has to go through regulatory approval and
Yeah,
acquisition of this. But
yeah.
yeah, it's a big jump.
So whoever was smart enough to buy before this earning
Mm,
is the one who is sitting pretty. Like that's they got a 45% increase.
hmm.
I think if I was in this position, I'm out. I don't
Yeah,
need to wait for the liquidity event, right? I don't need to wait for that. I can
yeah,
just get paid now. I might get $2, $3 more, but it doesn't matter. I just get paid now.
mm, yeah, totally.
Yeah, but it was not in my radar.
Yeah, I didn't even think Cisco was in a position to be acquiring companies like this. So I was pretty surprised to hear the news.
But Cisco always pays nice dividends, right? So
Mm,
people like Cisco because of its dividends.
mm,
The ratio is pretty good, right? And so even if this stock stays flat for a while because of dividend, you do pretty good. Of
mm,
course, like you don't want to buy here just because the dividend is nice. Then you're losing overall value, right? It's dropping significantly more than the dividend ratio. But
yeah.
you want to buy it when you start to see significant areas where price comes down multiple times in this area. Like you can never catch the bottom. So somewhere in this area, like if you buy in the low 40s all the time, if you buy in the low 40s, And if you get lucky and you see it down here, you say, I'm buying low 40s, but then if you wake up at in 34, you don't even second guess, right? You'll buy because you're going to buy at low 40s anyway, right? So you take this chance here, you take it again here, and you're not trading, you're accumulating, right? These are the areas where you're accumulating and you're taking advantage of the dividends. Like the shares that you bought here to today's price, you're up significantly.
Yeah.
You're up significantly. So that's always a nice play. But you know, talking about dividends, Verizon and AT&T have nice dividends, but I've never ventured buying those. I don't know why. Don't ask me why. Because I see overall, I see them pretty unstable. But maybe this is a good time, right? Right? Because when you look at dividend has not changed because of stock price, right? It's actually is increasing over time. I don't know what their payout ratio is, uh, but because I have not considered buying them, but this is one of those that's pretty good uh, dividend company. Coca-Cola is Warren Buffett's favorite dividend company. They pay pretty good.
So what does that translate to? 0.46. Like, is that per?
It's per
Yeah.
share.
Per share? Okay.
Per share, I think it's per quarter.
Oh, okay.
So it's $2 per share per year.
Yeah.
And if you take today's price of 57.94, that's a 3%, 3.45% dividend. Yeah, that's not bad. And again, as I said earlier with Cisco, you want to be a buyer in these levels, right? You want to be a buyer in these levels. So as long as you're buying in in these areas, like you're accumulating here, and not chasing up here,
Yeah.
that 3% is good because it's 3% plus this move, right? 17%. Now it's down, but this is long term. So if you are a serious buyer of Coca-Cola, these are the levels you're buying. So you're still up from these positions to today's close are still at 27% plus 3% annually, right? Yeah. And it's actually if you had bought it in the mid 40s, so 2 divided by 5, that's 4%, 4.45% of dividend you're collecting year over year, plus the gain on the company. So Coca-Cola is pretty good for dividend. Mr. Softy is good for dividend. It pays pretty good, right? But of course, the ratio starts to get significant, and for you to take advantage of dividend, you have to have a lot of shares. So that's why Coca-Cola makes sense. AT&T, like AT&T keeps going down continuously, but their dividend is, I think it's similar to Verizon. People buy AT&T because of dividend, but like it's not making sense to me. That's why I don't buy it. Like if I look at the chart, I mean, you can go back from 2000, right? I don't know how this makes sense. Even if you bought here, your overall investment might be about break even now after all those dividends. So I don't know. Like I don't get them. For people who had AT&T from the initial times somewhere in the nines, maybe for them it makes sense. Makes sense. But I don't know. I have yet to learn. I don't claim to be an expert in everything, but I have yet to learn the advantage of investing in Verizon or AT&T for the purpose of dividend. Okay, I think we've gone a long day today, so let's call it a night. We're ready to take action when the market gives us the opportunity, right? We don't trade in anticipation, we trade what we see.
Yeah.